Hello, traders. Gary Wagner here. It is 11:47 in Honolulu, 5:47 in New York on Wednesday, Fed Day, the 16th day of March, 2022, and this is the daily report for gold and silver. Today's FOMC meeting concluded with an expected liftoff, or the initiation of interest rate normalization, raising the Fed funds rate from 0 to 25 basis points to 25 basis points to 50 basis points. In other words, Fed funds rate is now 1/4 to 0.5%. That was widely expected. What shocked the investment community was their revised dot plot and the hawkishness or aggressiveness that the Federal Reserve is going to revise its monetary policy in attempts to take inflation to an acceptable target. While they're far away from their target, expectations now are that we will have a 2% Fed funds rate by the end of the year, with the dot plot and statements by Chairman Powell indicating that at each and every subsequent FOMC meeting, they will initiate a rate hike, probably in line with 1/4%, possibly even 0.5%, if they see inflation continue to spiral yet to a new level. Currently, we have the CPI at 7.9%. This is the first time we have seen inflationary pressures run this hot since January of 1982. Gold, extremely volatile this morning. It traded to a low of 1895, and actually, once the statement was released, it started to move up, but really traded around 1903, 1905 as Chairman Powell came on, and right after the press conference concluded, we saw an incredible rally with gold trading from down $25 to almost unchanged. Currently, we have April gold futures at $1,928, down at only $1.70 on the day. We'll talk about our current strategy when we pull up some charts. While we saw gold prices come off of their lows and gain back a lot of value after the release of the statement and press conference, the dollar really ceased trading because that trades in the New York markets and does not trade overseas or in Globex as gold does. What we did see in the dollar was the exact opposite, with it opening near its highs and then closing near its low, with the dollar index losing 0.7%. The index is currently fixed at 98.365. Very interesting action in silver today. We are recording this segment at 6:05 in New York, which means that trading has moved overseas into Australia, because if you note the close of silver in the COMEX today and the Globex prior to the break, and then reflect that to current pricing at $25.23, what we're seeing is a tremendous spike in silver pricing as prices opened in Australia. Currently, we have silver up 52 cents, reflecting the dynamic change that is occurring as we speak, up 2%, with silver futures at $25.24 when we rounded up 0.5 cent. Traders, today was an absolute game changer for all of the financial markets, with the conclusion of the FOMC meeting and announcement that there would be a total of 7 rate hikes this year alone. On today's show, I want to cover 2 primary points. The rest of the repercussions I'm going to cover on Thursday and Friday, but today I want to talk about the intraday low hit in gold and how that reflects our current upside projections for where we think gold could reach by the end of this year. And we have to take in mind the much more aggressive Fed. First, to today's intraday low. The low that came in trading in Globex and the COMEX was $1,895 and approximately 80 cents. It matches up precisely to the Fibonacci retracement level of 61.8% in terms of the low that was achieved and the subsequent recovery, and the fact that it is trading higher overseas really gives me a high level of confidence that the low we saw today was the conclusion of the subcount wave 4. We are now going to move into our final 5th wave, which will terminate with 5 of 5. We'll talk about that when we pull up a longer term chart. The last chart that we're going to look at today, we will cover in great detail tomorrow as well as Friday, but it is a weekly candlestick chart with our revised Elliott wave count and Fibonacci extensions used to forecast where we think gold could trade to by the end of this year. In essence, the largest wave that we are looking at in this current weekly chart is our intermediate count. You can see that we have marked the conclusion of 4, which happened in March of last year. We are also projecting that that puts us into our final 5th intermediate wave, which we are now projecting will conclude by the end of the year at $2,200 or higher. We are going to cover this in detail in terms of what we've seen and why we believe that wave 4, our subcount, has terminated, and we are entering our last of 5 out of 5 now. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Stay tuned.